and do this in the afternoon. So we're so excited to have so many of you here. Education is a huge priority for us. And so, yeah, we're going to tell you a little bit about Live Laugh. I'll keep that brief. I'm going to talk to you about some lending in general. So some very broad generalizations about lending. We do have Nicole Ruth here, who is a lender. We may have some other lenders on as well. So they'll be available for Q&A later if you need it. Nicole is not only a lender, but our stats queen here in Denver. So she's going to speak specifically to stats queen, stats boss, both queen boss. So she'll speak specifically to where our market is and what we're anticipating given obviously coronavirus, the stay-at-home order, and now the safer-at-home order. So she's going to speak to that, and then I'll go into the home buying process, and we're leaving 15 to 20 minutes at the end for Q&A. So there should be plenty of time. We want this to be interactive, so please keep your questions coming. Crack open a beer or whatever it is that you'd like, and yeah, we'll get the party started. So everyone can see my screen? Cool. And Mandy, are you recording?
Yep.
Perfect. So we'll have this recorded, so if anyone couldn't make the 4 o'clock, we'll be able to send it out. Well, like I said, I'm Lindsay Benton with Live Laugh Denver Real Estate Group. We are a boutique brokerage located in City Park North, but we have agents up and down the Front Range and have people specializing in all areas of the Denver metro area. Who we are, we're a team of 15 actually, with 12 licensed agents, plus myself. And we're comprised of friends who became colleagues, colleagues who became friends, and we serve friends who become clients and clients become friends. So it's kind of cheesy, right? But that's just to reinforce to you guys, like, this is all about relationships for us. And that's exactly why we lead with education. We want you to get to know us and us to get to know you. And if we're the right choice for when it comes down to you making your real estate goals a reality, then it would be our honor to help you do that. So it's a little bit about us. Our name, people love to call us Live, Laugh, Love, or Live, Laugh, Love Denver. It's a play on that. It's Live, Laugh Denver. Who needs love when you have Denver? Denver's an amazing city. And I had a lot of fun being single here. So go Denver. Additionally, with the laugh, we do try and have some laughs along the way. This is a big part of your financial life. Real estate is. So, it's serious and we take it seriously, but we also do try and have a little fun. Our mission is to educate, empower, and advocate for you. So ultimately, these are your decisions, and we're helping you have access to the information you need to make the decision that's right for you. And our vision is to deliver you a consistent and professional experience across the board with high ethics and high morals along the way. So you'll always get honesty from us, and from me, a lot of unsolicited life advice. So enough about us. There's a lot of agents on the call tonight, so raise your hands if you're an agent at Live Laugh. You guys probably know a couple of them. They invited you. But yeah, that's our team, and when we can have parties again, we have parties. Until then, we're doing some Zoom education and some Zoom happy hours within the team, but we'll see how this all plays out. So before I start in on the parties on the transaction, I want to clarify some pretty specifics that are easy. Everyone, as they understand it now, that the stay-at-home order did not include showings. That was a good week's worth of work to really nail that down. But the stay-at-home order did not include in-person showings. We have moved forward with the safer-at-home order starting April 27th, which will include showings. That is not for browsing. It is still something we're taking very seriously. We're minimizing our time being out in the community and spreading, our germs and engaging with others and all that. So we're going to be serving buyers who need to buy and want to buy and are able to buy, and sellers that are in the same boat. So we will be, making sure everyone has virtual tours to look at, does the drive-bys, does their own due diligence before we move forward booking an actual in-person showing, just to continue to minimize any exposure. So it's not business as usual. However, we are able to have clients try on homes, so actually go in them physically before they write an offer. So that will be good, and that should turn out to be a good summer for making some moves, but Nicole's gonna talk about that a little bit later. So in general, I want to talk about the parties in a transaction. So you have the buyer and their team, buyer and co, And their team includes a buyer's agent as well as their lender. And a lot of times their team might include non-paying parties, family members, friends who have opinions and want to share them. So they have their crew. And then the sellers are the current owners of the home as well as their agent. And the third party is the title company. And the title company is going to act as a neutral third party, which avoids Coloradoans having to pay for their own real estate attorney. And so they act as the neutral third party, and they'll be checking to make sure that title is clean along the way. So they help govern this and make it as easy for you guys to buy and sell, which is awesome. Lending 101. So we have had lenders teach this piece of it, a variety of them, and I've taught it a lot. But ultimately, right now, there's a lot of question marks in lending. There are still loans to be gotten, don't get me wrong. But I figured just going over some general basics is the best option for today. And then as you want to dig in more specifically, I'd suggest sitting down with a lender to talk about your own situation. But you probably hear a lot of these terms or have heard a lot of these terms being thrown around. So I wanted to talk about them. A conventional loan is a loan where the mortgage is not guaranteed by a government agency, and that's the most common. And the down payments there can vary. And as you can see at the bottom, they start at 3%, they can go up to 20%. I've had clients put 30% down if it's their second home or something like that. And there's benefits to that we'll talk about a little bit later, but it varies. The VA loans are just for our active and veteran military families, and that is a 0% option. And can be a huge opportunity for our military families. The FHA loan is the first loan I used when I bought my first property. It's a wonderful loan, 3.5% down. They have consistent rates across the board, so they don't vary based on your debt to income ratios and credit scores. And so that's a good option for a lot of people as well. And then jumbo loans. So it's above the conforming limit, which right now is 510 for the state of Colorado, and it varies in different areas. Denver's higher than that, but that number is always moving. So something to keep an eye on. And that's the loan amount, not the purchase price. So private mortgage insurance protects the lender if the borrower defaults. So there can be some benefits to having PMI on a loan. Most oftentimes you're going to have PMI on a loan if you are putting less than 20% down. So plan on that, and that gets worked into your payment. With an FHA loan that we talked about, the PMI doesn't fall off. So that's something to consider when making your choices. So that's just kind of an overview of the types of loans. And then we'll talk about like what goes into how you get your options for your loan. So your credit score. The big thing I like to point out here, we've all seen our credit scores. You probably are a very responsible person who has Credit Karma. That's going to be a different number if you go in for a car or if you go in to buy furniture. Your credit score is going to be different there than the algorithm that's used for your credit score for buying a home. So that's something to consider. People will say, I have an 850. I just went to Toyota, they told me, and for buying a home, it's actually 780, which is really good. So just to keep that in mind, Credit Karma is a guide, but not necessarily the end all be all. There will be lots of talks about debt to income ratio when you start buying a home. And when we talk about how student loans are killing the ability to buy a home, this is where it comes into play. Your debt to income ratio is just that, right? The amount of debts you have monthly versus your monthly income. Your monthly income number is going to be your gross number. If you're W-2, it's super straightforward. If you're a contractor, it's a whole different conversation. But if you have 2 years of experience, it's pretty easy from there. Regardless, that's your income. It's going to be gross. So that's something to keep in mind. And then the debts are going to be any debts that a creditor could report you on. So it's going to be if you already have an existing home, a car payment, your credit card. It's not going to include, and student debt is a big one. It's not going to include something like your Excel bill. So that is not going to be included in there. The debt to income ratio fluctuates also given where the economy is. And it was just about at 50, it was right around 50%. I don't know where it's at right now as far as most loans. So Nicole can probably speak to that. But it's just something to keep in mind, and don't go chasing waterfalls like TLC said, but also don't go trying to solve your own credit maximization issues, you're going to want to work with a lender on that because the algorithm doesn't always make sense. So it's just something to keep in mind. Your interest rate is the cost of borrowing money. You will hear people be like, dude, I just closed on my refi at 2.5. And the bottom line is you don't know what went into them getting that rate. So if you see things advertised or you hear your friend talk about some incredibly low interest rate, just stick into it a little bit longer and know that the interest rates that are being passed on to you by banks and mortgage brokers are based on what's available at that time. And what's advertised is usually based on 20% down, a high credit score, and oftentimes buying points down. And so there are all kinds of different options with that. The most common question I get during this time is, okay, but which is the best loan? And there's just not an answer to that. The best loan for you is going to depend on you, and it's also going to depend on the property. And so what we really focus on at Live Laugh, and I know that our lenders do too, is that ultimately you live in the payment, not the purchase price. So I'm going to worry less about what you qualify and focus more on what you want to spend each month to have that roof over your head. And from there, we're going to back into what that shopping looks like and what that budget looks like. So those are all things to consider when looking at loans and, kind of taking in the information. Ultimately, though, people will also ask me about shopping lenders. I always encourage people to be super intentional with their time. And so talk to someone you trust. Ultimately, brokers offer very similar rates and programs. It comes down to what their closing costs are, and your banks may be a little bit different. But all the good lenders out there are going to be willing to look at what else you're seeing and tell you how they're getting there. I've seen loan estimates where they didn't include the HOA fees. And so it looked like the payment was $300 cheaper a month, and it wasn't. So you just always want to make sure you're comparing apples to apples. And we can help guide you on that too. So that is the loan part. Any questions that came up, Mandy, along the way, or shall we move on to the market update?
Nope, you can keep moving on.
Perfect. Nicole? So Nicole Ruth is here. She is a lender I work with personally. We work with a variety of trusted lenders. We all have our own relationships here. Nicole and I work together. We do a lot of these kinds of classes. And she is also the headline sponsor for DMAR Stats, is a technical term, but really she's just the stats queen. And she watches the economy from a macro level as well as a local level and really keeps us and our team informed on what to expect when serving our buyers and sellers. So Nicole, take it away.
So I'll keep the market overview somewhat limited and brief, knowing that this is a home buying 101 class. You get pretty technical pretty fast, especially in this market, because there's so much to talk about. It is insane. But what I can tell you is right now, as we roll back into whatever this new normal is going to look like, as people get back to work and back to jobs and get to leave their home, there is going to be an uptick in inventory. How much is the question mark, right? Because during this time, people were removing their listings. And so now we're going to see some opportunities where people are going to go back to their life as normal. Jobless claims just came out this morning. Another 4.4 million people filed for unemployment, which puts our total unemployment right under 19%. Which means that there's still 80% of the American of age workforce, non-military workforce, that is working, graduating college, moving, getting transferred, that kind of thing. So if you're thinking about buying, other people are thinking about selling, they've been trapped in their home for the last 6 weeks, and it might not be the home that they want to be in anymore for whatever reason. And so now is a great time to be a first-time home buyer and walk into that opportunity. So I do think that we're going to see some more inventory come online. We're also going to see low interest rates. We're in the process of being in a recessionary period that is really defined as 2 consecutive quarters of GDP decline. It doesn't mean a depression. It just means a recessionary period. And who couldn't, I mean, we are having 2 quarters of GDP decline because nobody could buy anything, right? So consumer spending is 70% of that. And so when consumers can't spend, our GDP goes down, and so it puts us into a defined recessionary period. So as we go through and the government tries to help boost us back out of that, we'll see low interest rates. So there's another phenomenal opportunity, is getting into a home in the low threes, right? Interest rate, or if you're doing an FHA loan, a high twos, a 2.875 interest rate it's just incredible. It is the opportunity to get into that higher price point home with that lower interest rate, creates a lower monthly payment, which means that you can afford more home. Interestingly enough, when I stacked a home a year ago, based on where interest rates were a year ago and home prices, you can actually afford about a $42,000 higher priced home today than you could a year ago on a $400,000 home. So that's significant based on the increase of wages, the decrease of interest rate. Of course, all this assumes that you've got the job income and that steady coming through, especially as we get back. So that's a question mark. So if you've been furloughed and you go back to work, a lot of people are asking how that's going to impact eligibility and can you still buy a home? And you can. So they're going to be looking at this not as a long-term job gap, but obviously situational. And FHA has a guideline that says that once you've been out of work for 6 months, you have to be back to work for 6 months. So right now we're talking about 1, 2, and 3 month furloughs. So while that's the case, we expect people to get right back in. As long as we have a paycheck, we'll be able to prove eligibility and close on that home. Lindsay, I didn't want to go too deep, too far. Is that anything else you would like me to talk about?
No, I think that's a really great
Good.
overview of where we're at right now. I mean, we're talking a lot about low interest rates staying low as well. I think inventory wise, I mean, just the overall, and you touched on this too, you know, almost, or it was just over 2,000. We sent out the numbers yesterday. 2,000 were homes listings were expired and or withdrawn in the last, since we went into the stay-at-home order. Are those going to all come back at once? Even if they do, it's only 4 months of buyer demand inventory. And it really only becomes a buyer's market at 6 months. So ultimately, you know, the easiest way to look at it is we kind of just took a pause. And I think we all felt that, right? I mean, we were all at home as much as we possibly can be, except for, of course, our essential workers. And we felt that pause. And so it's going to come back. We will see far less showings because of, as I described earlier, we're going to really only be showing people who are ready to put in offers. We're going to be leveraging virtual showings and virtual open houses, as well as video walkthroughs. So you're going to be able to do so much research from your house. And then we are going to be encouraging people also to drive neighborhoods and go for walks around neighborhoods and really leverage that opportunity to immerse themselves in potential areas safely, of course. So our expectation is that we will return to a seller's market, which we've stayed in this whole time, and that will be shopping. I think there will be continued, stress on inventory, which we've had, and continued buyer demand, though that may go down a little bit. It'll be, 3 offers a listing instead of 10. The beginning of March was off in February. We're off to a pretty intense start. So I think the market took a bit of a breather, and we'll come out of it into the new normal starting April 27th. So the big thing now is I'm working with other broker owners and managing brokers to make sure that we don't ruin this for everyone. So the concern I have is somebody just trying to get more clients and say things that aren't true, or taking people around too much that aren't necessarily ready, and causing there to be more spread. So we are going to be pretty cautious. Cool. Go ahead.
One other thing, Lindsay, based on what you just said, though, this is the opportunity. If somebody's looking to buy a home, sooner than later is the optimal time to take advantage of this. While it is going to be, we are going to see some inventory re-enter into the market. Interest rates are still so low. And we were on a trajectory to hit, we were already at a 6.75% gain in median purchase price over a year ago. This was going to be a phenomenal appreciation year. So if we pick up and we cause this to be a pause, we're going to continue to see incredible appreciation over the rest of the year. And right now, like for this little blip, you're going to have less buyers looking with more inventory coming out. So I've told a couple first-time home buyers, we need to get in, and we need to get in like the first half of May. before it becomes, you've got more buyers upbidding those offers.
And before people start getting more comfortable with the new normal.
Yes.
I agree. I mean, we always laugh about this. Like, when's the best time to buy? Like 10 years ago, or 2 years ago. But ultimately now it's sooner than later. So I'm going to talk about the process a little bit. The big thing about owning a home is you pay your own mortgage instead of someone else's. So if you can get into that mentality of thinking that way, you're paying someone's mortgage. If you're renting, you might as well pay your own. And that was what got me to start buying the first time when I was 22, which is a whole story that a lot of people have already heard. So I'm not going to go into that. But I've been doing it now for 15 years, and it definitely is a great way to build financial freedom and long-term wealth. So let's talk about the actual process now.
Lindsay, we have a question about loans.
Sure, go ahead.
Is it normal for lenders to go with the lowest credit score when two people are applying for a loan?
It's going to be based off of the middle score. So there's 3 scores. There's Experian, TransUnion, and Equifax. And so we just take whichever the middle one is. It's not necessarily always the same one. We look at every borrower, whether it's say it's a married couple, and one of their parents, and that's a married couple, then say there's 4 people on the loan. Whoever has the lowest middle score wins.
Okay.
That's the score we use.
So it's the lowest of all the people.
Yep. Doesn't matter if it's 1 person on loan or 4 or 6. It's whoever's got the lowest middle score.
And a lot of times that's why we go with pulling people off loan.
Yeah. There's times it will,
if
a
we
spouse, especially if you have co-signers and you don't need one of the 2 primaries, we can remove them.
Yeah. Cool. Thank you. Okay, so what to expect? Like I mentioned, we're going to encourage you to do your own due diligence. The biggest thing that I tell people is you're the one that's going to be living in the home, not me. I may come to escape there, have a couple glasses of wine sometime, but ultimately you're going to be the one living in the home. So whether it's the neighborhood, the coffee shop to see if you like it, or the HOA documents, like you want to make sure that you're really absorbing and digging into that information. So you're going to be doing all that due diligence. We're switching to virtual open houses, so you'll be seeing more of that. So you'll be able to check out houses and ask questions directly to agents who are hosting those from your home. And then when you're ready, we're going to set up an online portal for you. So it will be custom. We only make it as specific as we trust our colleagues will enter their listings. So you'll see that it starts broad. We've focused a lot on location and price point derived from your monthly payment goals, and then let you kind of narrow down from there. And it's a portal. It's what the Zillows and the Redfins pull their information from. And it's a place where we can communicate back and forth directly. You can heart the listings that you love, light bulb the ones that you like, and recycle, discard the ones that you don't. So it's a good place for us to communicate back and forth. The average search, in March, early March, people were saying like, oh my gosh, I'm gonna have to look at so many houses. I've written, 7 contracts and still aren't under contract. And so you'll hear things like that. Ultimately, the majority of first-time home buyers look at, home buyers in general, look at 10 homes. And that'll be even down more now with virtual showings. So there's just so much technology that allows us to get a feel for a home before we walk into it. And I know many of us on the team put people under contract while there were no showings allowed. And then they were able to see it afterwards. And they're like, yeah, no, this feels exactly like I thought it would. So it's pretty cool how much technology is out there. And I think we'll just explain we're just going to continue to see more options come up. So. Okay, so contracts along the way, there's agency contracts, and that's your agreement with your agent that they're working directly for you and only you. So they cannot be working for the seller. That fiduciary duty is super important to us. We're representing you. In the event that you're my buyer and you love a listing that I have listed, I am likely going to bring in another agent to cover them. But if I were to be doing a transaction brokerage where I am working for both of you as a referee versus a coach, then you're going to see a ton of paperwork about that. So just know that once you go into agency with an agent, that they are working for you and only you in the transaction. And they're only going to disclose what you want them to disclose, and they're going to fight for your goals. Negotiating is probably my favorite part of working on real estate transactions. And I think that goes for most of my agents as well. It's just really fun to be able to advocate for clients and help make their lives easier. So that is a big part of it. And that comes through the agency contracts. Those are all signed online. The transaction contract, so if you hear something got 5 offers, just know that that contract to buy and sell is the offer. And the contract to buy and sell is 17 pages. It is a document that was created by Colorado attorneys. It is very easy to read, but it is long. So we're going to go over it with you, but we're also going to reference back during the transaction to different pieces of it. Because ultimately it's the contract, that's a contract between you and the seller, and we're just a piece of it. So that's something important to know. The other docs are along the way, like the inspection objection, where you'll be asking for repairs and the disclosures. All of that is going to be digital and digitally signed as well. So the only time that you're signing in person, and this is still the case in the state of Colorado, is at closing. So right now, closers are sending the majority of documents over email for you to DocuSign, so sign digitally, but you're still going in, or they're sending a notary to your home to sign. It's like 4 or 5 documents that have to be signed live signatures. So that is the only time you're really doing a live signature. So as agents, we still have limited ability to attend certain things. So we'll be keeping you in the loop on any of those changes along the way. But we FaceTime into a lot of things, or Zoom in to closings or to inspections with your inspector. Final walkthrough is like, we're just kind of a phone call away. So always here to help.
Lindsay, we have a few questions coming in.
Yeah.
Can you elaborate more on when you stated that you feel appreciation is going to continue given this market?
Yeah. Where or when or how?
Why you feel that appreciation is going to continue?
Okay, yeah. So we had such extreme buyer demand and such extreme inventory shortage that it has to, just based on numbers alone. Unfortunately, for some people are no longer in the market to be able to buy a home, and we feel for those folks for sure. But the demand is still there. The other thing that's going to contribute to rising prices is lower interest rates. So as the interest rates go low, affordability goes high, and that allows us to continue to keep pushing price points up. So those are basically fundamentally supply and demand, as well as interest rates keeping buyer access pretty high.
Thanks.
And of course, we'll see the higher appreciation at the lower price points than the higher price points, right? There's a different supply and demand happening down under 500 or 600,000 versus over. So, you know, as people are looking at those higher price points, they might be able to get a deal. It's a seller's market, or I'm sorry, buyer's market, versus the lower price points. You get a lot of competitive demand.
Yeah. So for a lot of builders, especially in Denver proper, it varies per area. I mean, Denver's become a very hyper local market, but most builders aren't building anything under 500 in developed communities. In the suburbs, you see lower than that. However, if you're looking for like a new build that is on a lot that's within an existing subdivision, those are all starting at 1.2 million. So we just, because of that, we see, and I guess we should specify, like the cold dead, I'm thinking more in the like sub 750 range. So once you get over 750, and depending upon the area, over $1 million, that's when you hit luxury, and then there's different numbers there. But most of the time, those buyers are not first timers.
All right. And then next question is, how much time should I give myself to research before buying a home?
Oh, I mean, I give myself 30 seconds. However, everyone has their own needs on that. I have some clients who need to have everything in a spreadsheet and like process it that way. A lot of people trust their gut a lot, and then you have different, and I'm a kind of a gut decider. I can see if the numbers are going to work. Okay, they work, and then I make the move. So really it depends. Once you're under contract, it's 30 days to close. And so while we're not in the business of getting people under contract and terminating and all of the ups and downs that causes for buyers and can lead to fatigue as well as for listings, you do have time to still process that decision. So I would say in general, take time to know where you want to be, what your priorities are going to be in a house. I really think that can be done in a couple of good nights of really like processing through that. And then, you know, some people buy the first house they walk into, or go tour a house and then see 12 more and they go back to that first one. So that said, once the market starts moving again, you're going to have to make pretty quick decisions. So we'll probably, I anticipate to keep seeing the Thursday, Friday, 60% of listings go to market Thursday, Friday. And again, this is specific to the sub 750, sub 500, depending upon the area. And then there's an offer or two over the weekend. So quick. That's why it's good to do the research beforehand.
All right, and then next question is, Colorado State at-home order has different end date than Denver orders. So essentially, can you just speak to what that means, that showings will not be allowed in Denver yet because the Denver orders will still be in place when the Colorado order is lifted?
Yeah, how about that, right? Pretty fun. So ultimately the stay-at-home order that Denver put in place had real estate showings as essential. And therefore, even though it extends to May 11th or 1st, depending upon the industry, 11th is restaurants, 1st, I think, is service industries. But regardless, Polis, when he came out, the governor about the state, his was until the 26th, going back to normal on the 27th or whatever, going to the new normal on 27th. And so basically, if Hancock were to come out and say, no, you can't do showings in the city of Denver, I have opinions on why that would not be good for his economy, but regardless, then we would have to adhere to that. But as of now, he never made showings non-essential. And so that's why we're sticking with what the governor said for the state. It's crazy because the city could supersede it. But as of now, we're moving forward as the 27th because of just that. Does that answer the question? Cool.
All right, last one. Can you speak to the main mistake in your experience that a buyer does? First-time home buyer, I'm assuming.
Waits too long. It's tough. I mean, we're here to guide you through the process to make sure that you feel confident along the way. I think that there was a time, and we were getting back into this, where buyers weren't asking for inspection items or they were being encouraged not to ask for inspection items from sellers. And so I think that there has been some laziness on some agents with that, and or just a want to move it forward. Honestly, everything about a house can be fixed. I've renovated and done every repair I think around. So it can be fixed, but really you just have to know. And so that's the biggest thing for me, is if a buyer is buying a house and there's some fixer-upper items, let's make sure you know what those are going to cost you before you move forward. And so even if a seller won't agree to them because they keep telling you over and over again how they have backup offers, which happens, then at least you're armed with the information. And I think that's super important. So I would say that that's the biggest issue, is not going in with full knowledge. Cool. Keep going for now?
Yep.
All right. So we talked about the shopping piece and how we can go try them on and all that. And once you get under contract, so we may have to write an offer or two, especially if you are sub 500, have some expectations around that. We have a whole list of offer variables that can help you win, that aren't just going up and up and up and up in price. So we really do work closely with agents in the community so that they know a Live Laugh Denver agent is going to get you from contract to close and help guide you properly. And that's important. But then we also have a whole list of variables we can leverage. So it's not just all about price point. So once you get under contract, we're going to do earnest money. Earnest money is 1% to 2%, sometimes 3% with a new build. And it is like a deposit. It is credited towards your closing costs and down payment at closing. And it's held by the title company, which is that third party I talked about early on. Super neutral. It's held there in their escrow accounts. It is cash. So we always like to remind people, a lot of times people have down payment sitting in a savings account. And so we'll remind you like, hey, that check's going to be cash. So move it over to your checking account. The option now is you can do a personal check and drop it off, slide it under the door, or you can wire in earnest money as well. So your first week on the real estate side, super intense. You're going to be getting your inspections booked. We're going to help you through that. We have recommendations for you, but ultimately along the way, every decision you make of contractors you use is up to you. So if you know that your brother used so-and-so and they loved them, you can use them, but we'll always have suggestions and help facilitate that. You're going to be getting your insurance lined up. We have recommendations for that too. I always say call your current car insurance provider, talk to them about adding your house to it, and then definitely talk to someone else as well, just to kind of get a gauge on rates there. The seller is going to send you the disclosures. The disclosures from the seller are them disclosing everything they know about the home. So that is up to their discretion. Excuse me. That is up to their discretion to do that. And then at the end of it, it says, and you should just go get your own inspection. And that's always what we're going to encourage you to do as well. So once we get your inspection report, we're going to ask them to do some things like I was talking about. We want to make sure we ask them to address any health and safety items. We talk about the big five: foundation, roof, sewer, electrical. I always do this plumbing. There we go. Other plumbing. So those are the big five. Those are the things you can't see when you walk through a home. You don't get to during an inspection be like, well, I wish this wall was a different color or there's a nick in the paint. It's really more about the guts of the home and making sure that the pieces you couldn't see are in good working order. So we're going to negotiate that piece. Your earnest money, I told you, is a deposit. Buyers are protected across America, but even more so in Colorado. If you ask them to do A through D and the seller says, I won't do anything, and you're not comfortable moving forward with that, you can object to the contract, terminate it, and get your earnest money back. We're going to help keep you on those deadlines to make sure that your earnest money is protected. Title's going to be working in the back end. Again, they're just in the background, making sure that the title is clear of any other liens on the property. So if the seller has a loan on it, maybe they have a home equity line of credit, or they owe a contractor some money, they're going to make sure that those people get paid off. So you're walking into a home that's owned just by you and you don't owe anyone money on it except for the loans you took out on it. Second to third week, the appraiser is going to go out. The cost for that is between $500 and $1,000. That's still accurate. They're going to go out. They're going to confirm the value of the property. This benefits you. You want to make sure that the lender agrees that the property is valued at what you're paying for it. But it also is going to benefit that end lender, and that's who's really doing it. But good news is you still get to pay for it. So it is, however, wrapped into your closing costs, so you're not paying for that at the time. Really the only cash out of pocket along the way is your earnest money as well as the inspection. So you'll be paying for that directly. Your earnest money has to be a check. The inspection can go on a credit card if you're a point person. Yeah, so the appraisal, let's say you're under contract at $350, it comes in at $340. The seller either has to agree to sell it to you for $340, or you have to bring the additional $10,000 cash, or you meet somewhere in the middle. And so again, that step is another point of negotiation, and we're going to help you through that process. So that is that step of it. And then the loan approval. So the first week is super intense on the real estate side. Like I said, you're getting your insurance, your disclosures, your inspections, and all that booked. The whole time you're in constant contact with your lender. And just when you think you've given them everything, you're now signing a letter that says, I had that month off of work because I traveled, or whatever it is. Their underwriter is going to ask you for different things along the way to make sure that your story aligns with your financial history. And then they're going to give you loan approval, and that clear to close will come 72 hours before closing. And that is the like, we get to do it. You get to buy the house. So then you own a home. Now what? So something to keep in mind is if you were to close May 15th, your first mortgage payment would not be due until July 1st. So you have that little bit of a window, which can be helpful, especially as you're navigating if it's terminating a lease or just expensive purchases that you want to make after you've closed on the home, like furniture and that kind of stuff. But once you own a home, the taxes, insurance, you'll get mail that says what your property taxes are and what your homeowner's insurance is. And then you'll call me and go, do I have to pay this? And you don't. So it's already being escrowed for. It's held in an escrow account by your mortgage servicer, and they're going to take care of paying that for you. But if you second guess it at all, always just ask your agent or ask your lender, and we can confirm that you don't indeed need to pay that big bill. Your loan will be sold. It's most likely your loan will get sold to a different servicer. That's totally normal. You're just going to want to check in with your lender to make sure that they did indeed sell it to Chase if Chase is telling you they have the loan now. We have 5 properties and they all are with different servicers and they all have been sold. So it's just the reality. So I always say don't set up an online account until you're sold. And then recommendations, we are here for the long haul, and we know, all the fun restaurants, but also all the best plumbers and electricians and all that. So we're here to help, and we're always just a phone call away. And I think that is good, so you don't feel on your own, because you are a homeowner now, which is super exciting. And that's it. You own a home. And then we always say, stay in touch. We throw parties when we can. But most of all, I love when my clients are like, hey, and we've had a lot of this over the last 5 weeks, what's happening? Do I need to refi? What are you hearing about this? Oh shoot, my sewer's backed up. What do I do? Don't worry, call Wes. I've got a guy or I've got a gal for everything. And that really is what our long-term commitment is to our clients and our sphere and our people. So what other questions do we have, Mandy?
All right. What is the difference between a broker and a lender?
Nicole, go.
All right.
Super clear.
So there are different options. So we are a direct Fannie Mae, Freddie Mac lender, which means we insure directly with Fannie Mae and Freddie Mac. We don't have any overlays, so it's just us Fairway, and we can react quickly. So I have my processors in-house, my underwriters are in-house, my funding and closing is in-house. It's all right here. A broker, and I was a broker for many, many years. In fact, I was a broker through 2006, 7, 8, 9. And that's where I'm an individual and I might be part of a larger group, but I don't have my own warehouse line. I don't have my own funds or backing. So I originate the loan. I talk to you, the home buyer. I tell you what I can do, and then I go and negotiate with a lender, a bigger bank or an organization, and they're the ones that actually underwrite the loan, fund the loan, and close the loan. So I'm going back and forth, and I always say that's like throwing it over the wall, and I hope and pray it sticks. It's a little bit more risky, especially in this turbulent time. They're going a little crazy right now, trying to figure out what they can and can't do because it's not in-house. It's on the other side of the wall. And then you have a bank. So we're non-banks, a direct lender like myself and a broker is a non-bank. And then you have banks, which is like your Wells Fargo, your Chase. They have it all in brick and mortar and within their walls. They do it all in-house. They just tend to be a little slower. Banks are really great banks. They're not great originators typically. So it's just a difference in how you work unless you have kind of a preferred personal connection or relationship with that bank. So that's, and a really big non-bank might be like Quicken Loans is kind of a good example of somebody that's a really big non-bank and you don't think of it that way, but they don't have their own depository accounts. So it makes it a little bit different. There you go.
No, that's a really good question. And I've had Nicole answer it numerous times and I still don't try and regurgitate that. I always say they have their small differences, but it's ultimately who the end buyer is of the loan.
Ultimately, the rates are super similar. They're not going to be wildly different, and the programs are relatively similar. It's about speed, connection, relationship, and dialogue. It's the same reason you pick a realtor like Lindsay and her team. You pick a lender because you think they've got your back. They know the process, the programs. And I would say it's less about being a bank, a broker, or direct, and more about the person.
All right, I have a follow-up question for that. what should I do if Chase doesn't lend anymore? Do I need to switch banks?
No, keep your banking with Chase, but then you'll just go to a mortgage broker lender instead. So you don't need to switch banks. Don't go through that hassle. Like Nicole was saying, Chase is really good at banks. They're just not buying loans right now, but other people are. So you have options. So stay put there. I saw a question about, I was going back through these because I've been in Mandy's position too many times and it's hard to follow them all. Oh, the negotiation range. I think someone asked about negotiation range, and I'm making the assumption that that's around price point. Just like every other thing in real estate, it just depends. When people tell me they want to get a really good deal, I say, well, then wait till something's been on the market for 2 weeks. If a house is staged perfectly and the photos look great and it's in a desirable area and it hits all the marks and you love it and everyone else is going to love it too, everyone else is going to love it too. However, if a property has been sitting on the market, look for bad photographs. It's a great way to get a good deal on a property. Or if something's been on the market for a week or two, then you can start negotiations there. Obviously, that will apply once we start going back. So it would be like 2 weeks after the 27th is when you'll start seeing some price reductions. Ultimately, sellers are either pricing it too high, and that's why it's sitting, and that's why you'll get a deal, or they're trying to price it just right, in the just right spot where they might get a couple of offers and do what's best for their seller. And then if they price it too low, you get so many offers and it turns into quite a thing. So, yeah.
All right. Once I am a homeowner, are there any time restrictions on leasing it out?
Great question. So you'll sign in your loan that you're going to wait 6 months before turning it into a rental, and sometimes a year. It depends on what the loan says. We don't know of people that are currently enforcing that, those lenders that are currently enforcing that, but you do really need to. I've bought investment properties as investments, and I've bought primary residences that I've turned into investment properties. And if you're signing the day of that you're going to move into that property, you better be moving into that property, or it's loan fraud and you're dragging everyone in with you. But you can turn it into a rental pretty quickly. As far as Airbnb goes, if you're still going to be living there and you're going to be Airbnb-ing out a room, which is the current intention, or maybe the basement or whatever it might be, which the current restrictions in Denver are very closely held, then you can do that right away. You can start Airbnb-ing a part of your house right away as soon as you own it.
Great. Can you talk about any other resources out there that you would recommend to follow the market trends and housing incentive programs in Colorado?
Oh, that's a great question. So housing incentive programs right now are on hold. And so I know that as soon as we have more clarity about what that will look like moving forward, we will definitely share that. There's a lot of question marks with lending right now. As we talked about, the end lenders, there's not question marks with your local lenders, but more so the Fannies and Freddies and the secondary markets. And so once we know more, I think there could be a stimulus come down the pike at some point too. But for now, we don't have any first-time homebuyer incentives, unfortunately. But we expect that they'll return once we kind of figure out what this new stabilization looks like. And then, what resources to follow? Honestly, I could spend all day, every day reading articles about real estate markets and the economy in general and all of it, not to mention crunching my own numbers. You can make yourself crazy. So my advice is find a couple of places that you follow and follow them religiously and don't start going around. I really like Elliot Eisenberg for the macro approach. He sends out 70 words every day. That is a snippet on the macro economy, which is awesome. And then, I follow Nicole a lot because she's our stats queen and get a lot of information from her. And then there's a woman in Title named Megan Eller who does a lot of that as well, crunching numbers. And then ultimately DMAR and Colorado Association of Realtors, so Denver Metro Association of Realtors and Colorado Association of Realtors, they're always putting out those market updates too. And all that information is what every realtor you know or see or follow on social media is leveraging to make the infographics you see from them. So kind of like I suggest people do with the news, they don't drive themselves crazy. I say pick a couple of sources to stick with, because there are tons out there, and just, be loyal to those. And you want to make sure you're tracking the same measures, because there's different counties and specifics and all of that. When you're getting ready to really make an investment, though, it's important, I think, to hone in on the hyper-local area. And that is something that I would advise engaging an agent to help you with.
All right, I think I got one for Nicole.
Okay.
Do you think that 30-year fixed jumbo loan rates will go below 3.5% at some point?
So that's a great question. Not everybody is doing jumbo loans right now. In fact, I was just talking with one of my bank resources that I use, one of the credit unions. Some of the credit unions are doing jumbo loans, and that's a loan over $575,000 in the Denver market. Some banks are doing them on ARMs only. All of them are doing them on 20% down only. Many of the banks have raised their credit scores, lowered their debt to income ratios, and made it really challenging. And the reason why, and people will go, well, it's a jumbo buyer, typically it's a more qualified buyer, why is it getting more restrictive? The reason is because they're not government backed. So it's not like a conventional loan, a Fannie Mae or a FHA or VA loan. They're bank loans, and so they have to be subsidized. They're not eligible for the forbearance program, but in times like this, if they overbought a little bit, they might be walking away, so there's foreclosure risk, and it's a lot of money. So most lenders, non-bank lenders, aren't even doing them right now. Some banks are still doing them, but with very high restrictions. So a lot of times we're doing like a first and a second, maybe a $575,000 first loan with maybe a 10 to 100,000 to 200,000, depending on the purchase price, second loan.
All right, I'll keep you here, Nicole, because I got another one for you.
Yeah.
Is there a limit on gifted funds for your down payment?
Not as a primary home. So you can get the whole thing being gifted to you. It could be 5-10% and you'd still have mortgage insurance. It could be a whole 20%, so you don't have mortgage insurance. If you're actually buying that home from a family member, they can gift you the equity, so it's not really money, but then you can buy the house kind of at a discount and not have mortgage insurance. So there's a lot of ways to work around that. The only limits around the gifts, no, I'm sorry, that's seller concessions. So yeah, there's no limit on that gift.
And if parents have concerns about, or assuming parents, but any gifters are having concerns about the tax implications of that, they can also be a direct investor and send that directly to title, which can help with that gifting, and it requires a lot less paperwork. So they can actually wire funds directly to title, and then there's not digging into how much is in the account. Nicole's not having to get as many, lender information signed. It's a good way to have them gift funds is to directly send that to title.
And there's actually the whole gift tax issue is, it's somewhat of it's interesting and people don't dive into it more. You got to talk to your CPA because there's an annual limit on how much you can gift. And a lot of grandparents and parents talk about that. Like, I'm going to gift all my grandkids a certain amount of money every year, but there's a lifetime gift limit as well. So if you even wanted to give more than you can in a year, you can roll it into the lifetime gift limitation, which is way higher than 99% of the people would ever hit. It really just limits the multimillionaires.
And who owns grandparents who were like, what's the gift limit this year? Me.
I want one of those.
Me too.
Can I go back to the